Just taking a look here at the SPY, we've traded up. We're basically butting up to the 200-day. What do you see out there tariff-wise and just kind of with the broader market?
Well, I mean, the market bounced before today. Was up. What's up now? So it's up about whatever 2.5. So it's up about 3.5% now from the lows. And that's a mild bounce, and not a big surprise. But the thing is, like you mentioned, that 200-day moving average is one everybody's looking at. The numbers this morning on the S&P Global's PMI numbers. The manufacturing was weaker, but the services were stronger. So that helped to goose the market a little bit more. But can we break above this 200-day moving average? And my big thing is that I think that the tariff issue is, although it's certainly important, it's not the number one issue why the market's been getting hit. Long before these tariffs, that we realized that the Trump administration was going to be very aggressive on both tariffs and on DOGE. There was already seeing weakness in the consumer, with consumer stocks getting hit and the data going weaker, the housing stocks getting hit and the housing stocks data getting weaker, the transportation stocks, same thing. So those economically sensitive stocks were already getting weaker. The market was very expensive. So whether we had tariffs or not, this market was ripe for a pullback. And I guess my point is that, Trump always comes out with real extreme things and then pares them back. That's what he's doing right now. The question I guess my issue is that April 2nd is not the most important date right now. There's not one date. It's going to be the April earnings season, which will actually spill into early May, because these earnings estimates have been coming down, not just since Trump became president. They've been coming down for 6 to 8 months. And if they continue to fall, Goldman Sachs last week lowered their estimates to a 7% gain for this year. You say, well, 7% is pretty good. That's down from 14%. 2.5 months ago, okay? And with a market, again, which is still trading at 20 times earnings, that's not a good situation. So I guess my point is that I've been saying investors should sell the bounces. The bounce that we saw for 6 days going into Friday was a very small one. So the fact that we're getting more of one today doesn't surprise me. And we could see it a little bit more, maybe even peak above that 200-day moving average before it rolls back over. But the outlook is not the headwinds that are being created are not just on the tariff issue. I don't think tariffs are going to completely disappear, number one. And number two, we have these earnings issues and economic issues that we have to worry about.
Okay, that is so well said. That I know you couldn't join us last week because of your obligations. I spent all of last week preparing the group for a potential move back up to the 200-day, and an inability to really close and move above it might actually present a fairly decent opportunity to maybe play some more downside here, play with puts or something of that nature.
Right.
And this is exactly what we're seeing here today. Really good stuff.